my Go See It project, I chose Main Street Bicycles, which is a small private C corporation in Carpentersville, Illinois. I chose Main Street Bicycles because it offers a good example of an inventory system that holds products over longer periods of time. The company uses an outside accounting firm, which I contacted following this interview, in order to fill in some of the information the president was not able to provide. This information will be included in short captions throughout the video. Hi, I'm Joe Petsinger. I'm here with Jeff Provisor, the president of Main Street Bicycles. He's been president here for 13 years since the company was made. And can you tell us a little bit about what your business does?
We're a bicycle retail store located on the Fox River Trail. We mainly sell new bicycles and accessories, parts and accessories, but we also we have a full service shop, and we have bike rentals, and we also do some used bikes as well.
What kind of inventory system do you use? When a sale is made, do you record that sale immediately, or do you do it at the end of a cycle? Or?
The sales are recorded pretty instantly. We use a QuickBooks version of a point of sale system, so as sale occurs, inventory gets adjusted.
Are the individuals who purchase the inventory, are they the same individuals that receive and record the inventory being received?
Usually that's the case. It's usually one person who is in charge of placing the orders and putting inventory in control.
How do you ensure that there is no conflict of interest between your vendors and the employees?
Sure. Well, in our case, ultimately the employees answer to what I want them to sell. So the vendors do influence in a way with education and small little incentives here and there, but in no way are they getting kickbacks or anything like that for selling products, unless it's part of a program that we've approved.
As you purchase inventory and inventory is coming in, do you attempt to sell the newer inventory or the older inventory first?
We'll always strive to move the old inventory first. It's inevitable that every year we have to bring in fresh stock, but we'll come up with ways to keep that older stock moving out so that we're not constantly getting backlogged with old inventory.
How often is physical inventory taken?
We take a physical inventory once a season, usually at the end of the year, and every little part and piece gets counted, evaluated, and find out what our true inventory is versus what our point of sale system says.
How do you record inventory shrinkage?
That gets reported to the accountant if it's anything substantial, more so than just a few dollars here and there, and then the accountant will see if it's enough to report as a loss for the end of year finances.
How are returns handled? Who records them?
The returns will be handled through the point of sale system. So if it's within our normal return policy time period, it's just something that gets deducted or put back into our inventory control, and a refund is issued.
Do you handle any allowances with your customers? Any payments or discounts if they pay within a certain time period?
We're not set up to offer anything like that, no. It's usually pay as you go. There's no added incentive other than losing a deposit if you don't pay in a certain time period. If we do offer layaway for that, but there's no added incentive, no.